Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Biora Therapeutics, ticker symbol BIOR. And so, looking at the chart, I just wanted to go over this because I think last week was pretty interesting. Beginning the week on December 18th with a gap down, and then by the end of the week, December 22nd, Friday, filling that gap. And so basically what had happened is on, December 15th, which was last Friday, we saw a low and close at $1.36, which basically, roughly happens to correspond with the 786 retracement, Fibonacci retracement, based on the November 30th pre-market low and after hours high. That's when price squeezed up to about $2.32 following news of approval for clinical trials. And so I think that level's pretty significant, did seem to serve as support over here when I thought that there was a bullish flag forming, which did seem to be happening. However, following news that debt reduction and raising capital, the price dropped, it gapped down. So I think that's kind of unfortunate because I do think that is news that strengthens the company, but the stock price fell following that. But over the course of the week, price did go up, so I think that is good. However, on Friday, let's see, I'm just going to move this so the volume profile is not in the way. So on Friday, we saw an inverted bearish hammer candle. So that's not so great news. We saw a wick up filling that gap, but was rejected from $1.36.1, that Fibonacci level 786. So that is, I think, going to be a pretty significant level to break above in the future. We want to break above and hold and close above $1.36. So we did see rejection from that with a close at $1.28, which happens to be the 21-day moving average. So I do think that it is good that price closed at that level, suggesting that 21-day average could serve as support. We also do see a lot of price consolidation at or below current levels with this volume profile here. There's a lot of volume at or below the current price, and so that could serve as support, suggesting that there could be upside in this shortened holiday week that we have coming up ahead. But, to prepare for the worst, to prepare for the downside, I do have highlighted $1.15, which was the lowest close in this range. I actually believe it's the lowest close ever for the stock price. So, we don't want to see closes below that. If we do see some wicks below it, just make sure we get a close above or at that level, because we don't want to be forming new lower closes. That would be bearish, suggesting that there's further downside likely to come. And so what I do see that is encouraging, not only the volume profile suggesting we're at support and the 21-day moving average, but also this downtrending channel that I have highlighted here that's shaded. Basically going back to the beginning of November, price began trading within this channel for the most part, and it does happen to be a downtrending channel, and downtrending channels tend to break to the upside. So I do think that is some pretty good news. And so basically what I would like to see in the coming week ahead, the weeks following that, I would like to see a close above $1.36.1, being the 786 Fibonacci retracement. If that can hold, it would be nice to continue to consolidate and ideally get to break above the next Fibonacci level at the 618, which is at a price of $1.56.6. And that also happens to correspond with the 50-day moving average. So I do think that is going to be a pretty notable level to break above as well. That could also correspond, at least moving forward, that will correspond with breaking out of this long-term downtrending channel that I have drawn here in these white lines. And so I do think that there is some, bullish potential for the stock price, even though there have been multiple news events causing price to go down. I should note that on Friday, December 22nd, news came out about, let's see, selling of 71 million shares. So that does improve the financial aspects of the company, but it does kind of shake investors to want to sell, and that's exactly what we saw. But we did see a close at support, so I do think that is good. Other levels that we might see that might stand out as important, I do have in gray $1.43, which corresponds with the highest close that we've seen in this range, which occurred on December 11th. Also, above that, I have, and above the 618 Fibonacci level, I have $1.61, and that corresponds with this low on, let's see, November 7th, which was breaking into that channel. And that also, I believe, corresponds with the high on December 1st, $1.61, which was following the big news when price went up really high. And also at $1.61, that's when we really start to see volume kind of taper out. And so getting above $1.61, there's not going to be that much resistance there. So then there would be more potential for price to move higher, like to $1.69, which I have highlighted here based on these lows, or $2.07, which is based on the close on, let's see, September 19th. That also had, let's see, a low on the day of $2. So I think $2 is definitely going to be a pretty psychological level to break above. But, following the kind of, bearish action with the gap down and the inverted hammer candle, I do think that there's a lot of great fundamental stuff going on with the company. And I do think that there are a lot of signs, such as this downtrending channel closing at the 21-day moving average and above this consolidation, the volume that we see here on the side. I do think that there's a lot of good stuff going on with the company, and I do expect to see higher prices in the near future, especially if we can break out of this long-term downtrending channel. And if you found this video helpful, make sure you like it, share your thoughts in the comments below, and subscribe to the channel for more videos like this. Thanks a lot for watching.